we ready to bounce, or is there another plunge coming? Let's take a look at the charts and look at some key resistance and support levels. The first thing I wanted to look at with you all is this little horizontal channel. Now this horizontal channel, as you can see on the chart, I have basically between about $40,600 and about $42,000 roughly. All right, so we got a range of about $1,400 here. This channel seems to be very significant, as you can see. Let's take a closer look at it. So before running up to 69K, this channel acted as support right over here. And where we are right now, the channel seems to be acting as support. Now also here, before we ran up to about 53K in September, before the last significant dip, this channel acted as some form of resistance. And then also if you look at summer here, when we hit 64 and had this huge fall down, this channel right here also acted as a resistance level before we turned around. So it rejected us, it sent us back down low. And then let's go back a little further. Back in January 2021, just about a year ago, when we had the January dips that sent us from about 41 to 42,000 back down to about 30,000, the channel acted as resistance here as well. And then again, one more time before we ran up from that 30,000 low of January 2021, about a year ago, that channel again showed some resistance. So that's on the daily. Let's look at it on the 4-hourly. Now, when you look at it on the 4-hourly, you can see it even more how this channel seems to be very significant. When we had that big dump from about 57 to 58,000 on December 3rd, 2021, back over here, we went all the way down to this channel, touched it, and had a major bounce off of it before continuing down to it. So this is the same channel, but this time on the 4-hourly. So I definitely think there's something here. So we're gonna keep an eye on this, okay? We're hoping we can keep this as support. We're hoping this doesn't turn into resistance, because if this turns into resistance, I'll show you where I think we might be headed next. Next thing we're gonna look at, to look at some more short-term resistance and support, is the bull market support band, all right? Take a look at the bull market support band. You can see in these two spots where this clearly acted as resistance for us here, okay? At this moment, you can see we've been below this bull market support band. I'm gonna start it here because we have been rejected by it every time since. So we've been below the bull market support band here for about 46 days now. Just about a month and a half we've spent below the bull market support band, all right? Now before that, we were way above it. All right, so definitely the bull market support band is something to keep an eye on. The last time we spent significant time below the bull market support band, we have to go all the way back to summertime, all right? So we first got below the bull market support band about over here, and then we broke into it and above it right here. So depending on how you look at this, we were below it for about 70 to 80 days last time, roughly, okay? So last time we spent about 70 to 80 days below it, and as of now, we are about 40 to 50 days below it. Now, if you want to go back to even more scary times, COVID. So this wasn't the bear market, this was the black swan event. Now, starting from here during that massive dump down to where we broke above it, officially I would say over here, that was about 50 days, all right? But remember, that was a black swan event. Now I want to take you to the actual bear market. So we went all the way back to October 2018. Between October 2018 and March 2019, which were kind of the peak bear market moments, it took us around 152 to 170 days to go from being under the bull market support band to breaking back above it. History doesn't always repeat itself, but it tends to rhyme. I would expect generally to stay below the bull market support band anytime between 2 and 6 months. It's a really broad range, but it's just kind of an idea of what things look like when it comes to the bull market support band. Now that we've taken a look at the bull market support band, I'd like to take a look at another indicator, the Ichimoku Cloud, which basically acts as another support/resistance indicator. So let's take a look at it. where we're at here is we're kind of stuck between a rock and a hard place. All right, so we're hugging right up against this channel. We're below the support band, the bull market support band, and we're also well below the Ichimoku Cloud. So what this shows us is that we're not digging out of this easily, and we're not digging out of this anytime soon. There's a ton of resistance to break. We're closer to support than we are resistance, and we've bounced off of this support multiple times. So looking at this Ichimoku Cloud, let's kind of take a look and see how this has interacted with our price in the past. So during dramatic drops, you can see we tend to fight our way through the Ichimoku Cloud downward. And then of course, when we have massive rises in price, we tend to chop our way up through the Ichimoku Cloud. And as we're having parabolic rises up, we tend to bounce off of this support and or just kind of stay above it, but follow it roughly, all right? So that's the Ichimoku Cloud and how that's looking. It's definitely just indicating heavy amounts of resistance ahead. Now the next thing we want to look at is the Fear and Greed Index. These markets are all about psychology. They're all psychological. And naturally, in any market, whenever the price is up significantly, at an all-time high or very near an all-time high, people tend to get greedy and they want to buy. That's why people FOMO in at the top. When the price is down significantly and far away from its all-time high, people naturally get fearful, they get scared, and they want to sell. It's just psychology. It's just how the markets work. This is how the markets have always worked, and it's how they'll always work. Now let's take a look at this chart here. I really like this chart, okay? So here's where we are right now. We're in heavy fear. We're in very high amounts of fear, as you can see represented by these orange, reddish dots, all right? And look at the price points we're at. We're at about 42,000. Whenever we're in these fear moments, it tends to be a good time to accumulate. It's not an exact science. You don't want to live and die by the Fear and Greed Index, but at the same time, whenever we're reddish, orangish, it tends to be a good time to accumulate. Now, just not that long ago, all right, so we're in January now, and we've been in fear really since about late November, okay? So we've been in fear now for almost 2 months, okay? Now, if you move back a little bit, just about 2.5, 3 months ago, we were very greedy. And what happens right after we reach peak greed? We always go into fear and drop, okay? So we were very greedy. People were FOMOing in at the top. People are trying to get rich overnight, and people are trading with leverage. Then, of course, we had September when we experienced it less than a month. Looks like just a few weeks we were in fear in September. So that was kind of a quick dip. And then the summer. It was pure dread over the summer. I mean, there's really nothing else I can say to describe it. From May all the way through August, basically, we were in fear territory. From May through August. Almost 3 months of fear over there. But again, what happened after these moments? We turned back around. Now, what I really find interesting, just a year ago, okay? Let's go back a year ago. In January, last January, we were at these same exact price levels, around 41 to 42,000, and we were in greed over there at these same price levels. So put that into perspective. The same price levels we're at now, we're at extreme fear. And just a year ago, we're at these same levels, and we're in extreme greed. So you need to keep that into perspective because these markets are highly psychological, highly emotional. You have to go against herd psychology and pretty much use reverse psychology to beat these markets. All right, y'all. So the next thing I want to draw your attention to is a rising channel that started to form recently. Here it is. I drew this channel basically from this wick low over here where we went to about 39.5. We went to about 39.5 the other day. That was January 10th. And the bottom of this channel kind of acted as support for a while, and the top of the channel acted as resistance. You know, this channel seemed to be, at least somewhat significant here. And if you really wanted to, you could maybe even move the channel back to here to even show it stretches back even a little further. So we were in this channel for a while, okay? It acted as pretty strong resistance, and then it acted as support a couple times, but we actually broke below it. So we broke below the rising channel, and we're now bouncing off this horizontal box I drew, support box. Again, we're in between a rock and a hard place here. So this channel is now resistance. This box is now support. It is possible that if this box doesn't hold, then this box could then become resistance, all right? And just to put some more food for thought out there, we've still got the bull market support band all the way up here at around 50,000, 50 to 53,000. We've still got these Ichimoku clouds here acting as resistance. We've got this rising channel acting as resistance. And if we really go down any further, we'll have this box acting as resistance too. So it really doesn't look like we're in that pretty of a place in terms of all the resistance levels ahead. Now this is on the 1 hourly time frame. We can also look at the 4 hour time frame, and we still get a pretty good picture by these shapes and tools here. A lot of resistance ahead. And then here's the daily. Looks a little funkier here, but it still pretty much paints us the same picture. Just a ton of resistance up above, guys. Now another shape we can draw is a downward channel starting all the way from the peak of $69,000. So this channel, of course, it's a bearish trend going down, but this may give us a little bit more hope. This may make us feel a little better because, as you can see, we pretty much use this as support on the way down, and it's acted as resistance here and here as well. And if you look at it here, we're actually coming to a point where we could be breaking out of this channel, right? So we could be breaking out of this channel with this horizontal box acting as support here as well. There's a little bit of confluence there. We're not sure what's going to happen yet. These are just different little patterns that are all kind of happening. This might make us feel a little better though, because according to this, on this little shape, we're not at support yet. So that could make us feel a little better. And this is how it looks on the daily time frame. A little sharper, a little less pretty looking, but that's just how it looks. And here's how it looks on the hourly. So it's just another little thing to look at, another thing to keep our eye on here. Let me go back to the 4 hourly because that was the best. Now over here, as you saw, we wicked way below the channel, again to my support box, but then we bounced right back up into it. This big wick here is a liquidation event, and pretty much all throughout Bitcoin's history, whenever we have a massive liquidation event, we always tend to bounce and then dip a little lower than the previous liquidation. We had that happen over here in September, massive liquidation candle, bounce, went below it. And then, of course, during the summer, huge dip over here. We went from around 60, had this massive liquidation candle all the way down here, bounced up, and then wicked below it again a couple times. So that's normal. That just tends to happen through Bitcoin's history. On the positive side of things, on the bullish side of things, we're hoping that that's what happened here. Massive liquidation candle, bounce, couple wicks below it, and then hopefully we can continue upward after this. That's the hope. I don't know the future. You don't know the future. No one does. With these charts, I use them as a tool to kind of predict possibilities and get an idea of where things might be going, so I'm not shocked or surprised. So I drew a couple lines over here. First line I drew was from the pandemic low to the summer low. And you could see where this line, had its moments of importance. It kind of acted as an area of kind of resistance here. Same thing around here, resistance and support over here. Bounce off of the support over here, here. This is where we're at now. So the bullish case would be this is the line to follow. The bullish case would be pretty much we've already bottomed out here, and this is our new long-term support, okay? That's the kind of short-term bullish case, is that we don't go below this line. Now the next line I drew comes from the bear market low of 2018 up through the same intersection point, the summer low. And based on this line and this channel, That means we have space to go down further to around 34 to 35,000. That's kind of the short-term bear case. This would be saying that we still have room to go down based on how this channel moves and how this line moves. I paint these lines and show these shapes because we don't want to be shocked. We don't want to be caught off guard if something happens. According to these lines, we've got room to go down to 35K. Let's mess around with some Fibonacci's. Grab our Fibonacci tool. Where these two lines intersected over here during the summer lull, July 2021, we're going to draw our Fibonacci up to the all-time high that we made recently. And that is what that looks like. So we're going to use the Fibonacci tool again, and we're going to draw from our pandemic low over here up to our top as well. Now take a look at this. Let's look at this a little closer now. If you notice, both of these Fibonacci retracement tools pretty much line up exactly. It looks like there's only one there, but there's two of them there. They just pretty much are lining up on top of each other exactly. That's kind of wild to me. And if you look at these levels, we've got the 0.5 Fibonacci level right here. And what does that line up perfectly with? Our channel and our two lines here. So the combination of the two Fibonacci tools we did, the falling channel, and the two lines we drew would argue to us that the bottom would be somewhere around where we are now, as low as 34 to 37,000 or so. I'm not saying we're going down to 35 to 37,000. I'm not saying I believe that, but it's a real possibility. It could happen. So be prepared for it. Don't be caught off guard if it happens. If you feel comfortable buying more Bitcoin and or crypto, you can keep your eyes on the markets and you can just continually buy on your way down, on our way down there. If you're a little more advanced, you can set buy orders and cascade them from 35 to 36 to 37 to 38 to 39 to 40. You also can just stick with the age-old tried and true strategy of just buying the same amount every month, every time you get paid. So those are, a few different ways you can go if you want more Bitcoin and or more crypto. If we go down there, just don't be scared. Don't panic. Stick to your plan, which for most of us should probably be just to continually accumulate. Because right now, a lot of people are already scared. But if we get that one more flush down, that's going to increase the fear levels to insane amounts. People are going to be terrified. And whenever people are terrified, you usually can't lose by buying. But yeah, that was it for this market update video. This was our first Bitcoin market update video. I'm going to try to pump these out, consistently once every 7 to 14 days or so, 7 to 10 days. We'll fine tune that, but I want to thank you for checking out this video. Make sure to check us out on Instagram. Make sure to subscribe, leave a comment, a like. Also check out Crypto Jordan, the brother channel to this channel. Yeah, for now, thank you everybody, and just make sure to have a wonderful rest of the day.